This will just be a very brief slideshow, and then we'll get into some live charting to show you how to get the significant levels, how to play them. But again, this is the part 1 of 10 in the series. This will last for the next 10 weeks. So we're going progressively from more beginner, what you need for fundamentals, up to more advanced strategies at the end. I can give some homework out if you guys want it. Have you chart, and then I can get that back at the beginning of the next class so you can see how you did. So this one will just be on significant levels, support, resistance, key levels, many different names for it. These are, I'd say, the most fundamental thing that you need. You can't really do much for other charting. You can't do much for trading if you can't get these down. So the agenda here is just going over what they are: support, resistance, as I said, key levels. There's a lot of different names that people call them. How to find the significant levels, and that will be the live charting. How to use the significant levels for trading strategies with them, and then we'll just conclude with questions at the end, and I'll end the recording so they don't overlap there. So significant levels are just locations in a stock's price where movement struggles to proceed, whether it be up or down. If it's going up, it's going to be resistance that it needs to get over. If it's going down, it's going to be support that it needs to break. As I said before, it's referred to as key levels, support, resistance. Some people may call them order blocks, many different names, but they're all essentially the same thing. So on the chart to the right here, you can see we have several wicks rejecting off this white line, which is the significant level. Again, as I said, it's resistance when the price is below, support when the price is above. After this, I'll show you how to get these levels, but you see that rejects, comes down, rejects, comes down, rejects. It's rejecting off the support, or the resistance, excuse me. And then it finally breaks and has a nice break. This is what you'll be playing here. You're waiting for a candle to close over that resistance. You can play calls and have a price target to whatever the next significant level is. Same with the bottom. You can see tail end to the right over here. It's bouncing off it, and then it pittered out, I believe. So again, these are definitely the most basic form of trading. There's two types. It's intraday support resistance, and then longer term support resistance. So intraday are significant levels that only last for that day or the week. So if it's intraday, it's obviously that day. If it's intra-week, it's that week. Longer term is anything more than a week. So the white lines I put on my charts, those are the longer term. The blue lines are intraday. You play them the same way. You wait for a break of the level. Enter based off that. So here, for example, you can enter puts. Play it to the next significant level. You could play bounces or rejections. That's possible. I don't, because your stop loss, you could have a break like this where you went to play a bounce, had a small bounce, and then it rejected and came back down way down, and you eat the loss on this candle right here. Downside to it is that fake outs can happen just like any other trading strategy. The way to avoid this is just don't trade during volatile times. And by this, I mean the first 15 to 30 minutes of market open and close, where the price action is extremely volatile. It's not as accurate as it should be. It's more so kind of setting the mood for the day, which way we're going to go, up or down. So increased volatility means that these significant levels aren't as significant. When the volatility decreases a little bit, then they're more consistent and you're able to play them. Another thing to note is these intraday support resistance levels. They kind of pitter out as the day goes on. So you can see that had 3 strong bounces here, or 3 strong breaks that you could have played, and then maybe another one here. But after that, it kind of just pitters out. And I believe this is 3 o'clock right here. You can see it did close over, and then it invalidated the level and ran right back down. So The earlier in the day you find these intraday levels, the better off you are, but you don't want to be playing them later on in the day. These longer terms you can play, as I said, day after day because they are significant over a longer period of time. So you can see here, bounce again, and then this concluded the day, came back down, broke it here, rejected it the next day, and you could have played the same level. So this is just another example on a different chart in the video. And this is an example of a fake out here. This is the first 30 minutes of the market open, last 30 minutes over here. So it did close below the level, and then it reversed back up, reversed back down. This is that increased volatility that I'm talking about that you can avoid to minimize your fake outs, minimize your losses. And then you can see the levels still significant later on in the day when volatility is gone, or not gone, but lower. Had two candles that struggled to break that level, finally broke it, and then almost it did run to the next significant level. It just took a little longer than it usually does. And then it formed an intraday support right here as the price closed over it, and then a support bounce over here. Never cleared that 148.09 level over here, so that held resistance for the entirety of the day. And again, you can play that same 145.47 level the next day. You can see it rejected here just before open and then proceeded down. I leave these white lines on my chart, so anytime you see a white number on the side of my chart, those are all longer term significant levels. Anytime you see these blue lines, I usually just delete those after the day is over because they don't hold significance for long at all. And again, that's going over this right here. You can see that, as I previously stated, they kind of peter out as the day goes on. So you avoid that by getting in on those significant levels, those intraday levels earlier, and then avoid them at the end of the day. 1 second. So I believe that is it for just the short slideshow here, and then we can get into some live charting. So I'll use NVIDIA right now because as I said, I already have all these white numbers on the side. These are my longer term, and then we can get into blank charts here where I can show you guys how to get those significant levels for yourself. So NVIDIA is a pretty easy one, or it was. I'll go to the daily here so you can see all the levels I have for it. So again, all these levels I put on here, I don't touch. I leave it. I do go back and back test these levels a day, a week after, to make sure that they are still significant. If they lose their significance, so if you see, like here, for example, where the price is just chopping over and under the level, not really regarding it, it's not caring if it's support resistance, then you go ahead and just delete that level and go on to charting new ones. So again, you don't really want to be trading during the first 30 minutes because it increases volatility, decreases the significance of the levels that you're trading. It's apparent at pretty much the opening 30 and closing 30 of every day. The levels, as I said, the definition for them is that anywhere that the price struggles to continue, whether it's going up like this or going down. You can see that we formed an intraday level here. This was actually a pattern that got formed. Those are pretty easy to identify as significant levels, or intraday levels anyway, when patterns form because they form a neckline. In this case, it was a head and shoulders I was charting. Kind of invalidated the right shoulder here, but it did proceed to go down. I'm trying to find a nice day, a good day that I can refer to here. So this is pretty... no, I won't use that one. There's a day that these levels are pretty accurate. So this is a good day. So opened in between, right in between two significant levels. We had a rejection off of the resistance because the price was below it. Didn't quite get to the support. You would play this by entering calls on the close on this candle right here. So 170.80 is a resistance, significant level. Close the candle over it. We enter calls on that close. You can also wait for another candle confirmation to close over. Your next course of action is to set a price target. I typically set them at the next significant level. So in this case, it was 172.65, and we ran straight to that. I typically secure at these levels, or my first price target. What you can do is you can set this price target as your break even, or if it closes below, that's where your stop is, but you're in the green, obviously. And then you can set your next price target for the next significant level, which it did run all the way up to. Because the price was so, let's see what this day was. I believe this was a large percent gain, 5%. So it starts getting more difficult for the price to continue once it gets this high or this low on the day, if it were the inverse of this. And then the next day, where'd the chart go? Oh, that's the close of it. So that's how you could have played it this past Friday. Take calls over the significant level, price targets the next one. Again, you can either secure here, that's what I do, or you can move your price target up and just continue to ride that up. You likely would have been stopped out on this little pivot here if you continue to just move your stop loss up, because this was pretty substantial for a Friday, and then you could have either entered on a bounce here or continued up to your next price target. So how to find these levels is what you're looking for is anywhere that a chart, again, anywhere the price action struggles to continue. So this is just a naked chart on Roblox. I do have one previously drawn one here. I'll go ahead and delete that, but I'll show you how I get that. What you're looking for, and I would say this is likely an intraday one, could also be a longer term. You're looking for anywhere that these candles, multiple candles reject. I usually say, I'd say two or three confirms that it's a level. For longer term levels, I'd say that you want to see anywhere from 5 to 6 days where the level is consistent. So if you go in the daily time frame here, that's how you usually get your longer term levels. You can see that for this 28.54 level, I have this from back here in May on Roblox, but you can see that we broke it initially here, didn't really retest it, and then when we did come up to retest it, we closed above it on the next day, but we came back down and then based over that level right here. So 2 questions really quick. When drawing lines for intraday, what time frame do you use? Same with intra-week. For intraday and intra-week, I use the 5 minute. For longer term, I use the daily, or you look for multiple bounces on the 5 minute chart. So, and to draw these lines, what you do is, for intraday, I use the trend line here. For longer term, I use the horizontal ray. The horizontal ray, from whatever point you click, sends a perfectly horizontal line out infinitely to the right, whereas the trend line, just you draw it yourself, and sometimes it's not flat. Like if you mess it up a little bit, you can see if you click on this, it says 32.75, 32.77, so it's got a little slope. So for finding these, I'd say this is an intraday level here on Roblox that you can play. You can either play the break, which happened over here at the end of the day, or you can play rejections off of it. So you're looking for levels where there's multiple rejections or multiple halts in price. Then once you get those, you just want to draw a flat line and then adjust. You can pick it up and adjust it based off of where you drew it. So if you're using the 2 wicks here, the wicks did reject off the same level. What was this? 33.91. And then at the end of the day, you can see that we broke that level, bounced off of it, kind of closed below it here, and then we did close below it on this 325 candle. Came back up, rejected, and then pushed down for the rest of the day. So I would say this is intraday level at this point, and then because we have 1, 2, 3, 4, 5 touches, we need 1 to 2 more for it to count as a longer term level, or intra-week, or just a longer term support resistance. So you can extend this line out for the next day, and you can see, yes, it's in that volatile time, the first 30 minutes of market open, but it did get above this level. Once it broke, it had a wick that came back down, retested it, and then bounced up and continued up to the next price target, which, as I just deleted that line so you can't see it anymore, but I did have a support at 35.62 on NVIDIA, Roblox. So you get that horizontal ray out, 35.62. I believe I had this from some time back here previously, but I'll go into a better chart that has a little higher liquidity on it. Roblox is a slow mover, so it's a little difficult to get those longer term significant levels. Let's see Google here. And if you guys have any charts that you want me to look at to get those significant levels on, I'll be more than happy to. These are just the two that I looked at, Amazon and Google, because I think they're pretty easy to get them on those significant levels. So I would say one is right here. Let me draw it out here. So the reason I put this level here is because we had a rejection. We had a major bounce or push down, came back up, and we rejected, and then pushed down for the rest of the day. And then you can see here on the next day, same thing, push down, push up, rejected off of 91.62 on Google. Socks on TQQ, gotcha. Rejected down and then pushed up. This is a Friday after 12 o'clock, so volatility is high. That's why this is a little invalidation candle here. So you would want to look for the next day. I would say this is probably an intraday, maybe intra-week level, because it was over 2 days that you could have played a rejection off that zone. I'm trying to go back to look for, there we go. That's a good one right there. So this would be intraday. You obviously want to see more bounces, rejections. Could be intra-week, but first we got to see what the significance of this level is. So you see one initial rejection here, a second one, third, fourth. So you can go ahead and draw a line, make sure that you have all of them in there. So I would say this is an intraday level because it's earlier in the day. We had one initial rejection, a second one. The later in the day it gets, again, the less significant that level is. So we can say they may last 2-3 times, two to three good levels that you can play, or zones you can play, and then after that they kind of get a little invalidated. But if you were able to play this level 3 out of 4 times, I'd say that was pretty good. 75% win rate on this level. If you took puts on the rejection 3 times in a row, you made higher percent here, somewhat lower percent, and then probably 5 to 10% here, and then it invalidated that level. We continue it out for the rest of the day. It hasn't touched it since, but if we go back, just draw it out back this way, we can see that it did last, or it was significant the day before as well. Came down, closed below, held below it. So one green candle wick, tried getting back above, rejected again, pushed down, rejected, pushed down once more. The way that you play this is I enter when one candle, sometimes 2 candles close below. enter puts here, for example, price targets, whatever the next significant level is, or just downside if you want 10, 5, or 5, 10, 15, 20%. Aim for that and have a stop loss set above the level that you took the trade. So that is how I play these. Look at Disney here. I believe I already have levels for Disney, so it might. Yeah. But this will be relatively easy to chart. So you can see this is a white level, so it's longer term. Just looking at this past Thursday, January 19th, we can see 1 rejection, 2, 3. That 2 is enough to validate the level. You can either aim for just bodies, so ignoring the wicks on the candle, or you can include the wick, but it doesn't have to be the top of it. So what I mean by that is a level is able to form like this, and then you're also able to have the body of the candle close below it, but a wick can come above and then still mean that this level is valid as long as the bodies close above or below the level. So if you have wicks like this continuously, and then you have a candle that finally busts over, and I'd say the next candle does something like this, where it closes over and has a wick down, you would still be in this trade because the level is still valid. So what you're looking, you can use the wicks of the candle to chart the level, but you don't want to use the wicks to validate whether or not you get in or out of the trade. So for instance right here, what I would be looking for is a close over 99.41. So I want to see a candle close, the body of a candle close over like this. If it's a candle like this and the next one opens right here, I would still validate this as a close over that level. If you want to be more secure, what you can do is you can wait for a confirmation candle to close over. So if you get a candle to close like here, yes, we broke the significant level, I can take calls expecting it to go up, or I can wait for another candle to close either here, up here, and then enter my calls and expect it to continue up. The downside to this is that if you wait for that second candle, so if you wait for this candle and then another one just explodes up like that, you're gonna miss this move right here because you waited for another candle to close. The downside to not waiting for a confirmation candle is you could get a fake out where it does close over the level and then it comes back down like this, and then that's your invalidation level there. So you take the loss on the trade because it closed below the level that you took the trade at. And this is just the strategy for taking trades on significant levels. So if we go back to another day, you can see the level is still significant here. Rejected off it right at open, pushed down. Didn't close over it until the end of the day. And then because volatility is high, it kind of invalidated it. So this wouldn't invalidate the level because it is during the first 30 minutes, last 30 minutes. Here, the level is still valid. You can see that, yes, the candle came down relatively sharply. This is a case that you would want to wait for that second confirmation candle to close. So you don't want to chase when a candle breaks this much on a significant level. I don't chase when I usually give it about 20 to 30 cents. If it exceeds that amount, then I won't take it because it could come back up, bounce off the level, and then either go down or shoot up. In this case, that's what happened. So the level is still significant. You don't want to chase on this large of a candle, but this opportunity right here would be a good opportunity to enter calls. You can see that we came back up, closed this candle over the level, so you can enter calls on this candle and then push it up. You would probably be up 20-30% on this candle, and then you can either, again, have a trailing stop loss continue that price movement up, or you can just secure right there, but you would miss out on this additional move. This right here I would say is another significant level. So again, charting these, what you want to do is find anywhere that candles halt their price action or struggle to continue price action. In this case, it was downside at the beginning of the market, pushed up, price tried continuing up, and it hit resistance, so it rejected and continued down instead. So you can draw a level right here at 100.83. Price tried continuing up, rejected, pushed down. If you continue it out to the next day, you can see that it got kind of invalidated. So this might just be an intraday level. You can also go to larger time frames, but the problem with this is that if you go to this 15-minute, you're taking the trades based off a 15-minute time frame, not a 5-minute. So you would wait for a 15-minute candle close above. And in this case, and this is what I was saying, that you can wait for confirmation candles, or you can just go in right away. If you were trading on the 15-minute time frame, you had a nice break of 183 on Disney here. You can wait for another confirmation candle on the 15. This candle closed back below that level, so that doesn't give you confirmation to get calls, obviously. And then it continued down to the next significant level. So I wouldn't refer to this as a fake out per se. I would say that this is one of those times that you would want to wait for a confirmation candle. Kind of same with over here as well. This would likely be a loss if you had waited for a confirmation candle, because we did close back below that level. Or the levels that I have is just wrong, and then you go back into the chart and alter it, and then you can see, oh, the level was just off, so it's actually 99.35. So that's what I mean by back testing. When you go back in and look at the charts, what levels you have on your charts. So if I had just left the level at 99.41 and I never go back and look at those levels, I think that they're valid for the rest of eternity. You can see that the more time goes on, the more invalid the level gets. It's still relevant at times, but other times it's just it's completely useless, right? Like right here or right here. That's why you want to go back in, back test the levels that you have, alter them if you need to. So move this level down like that. You can see still significant over here, rejected, pushed down, closed over to close the day, and then it gapped up the next day, bounced off the level, closed below, and then it kind of loses its significance as time goes on. So that's why you want to make sure that you're going back in, altering your levels, back testing them if you need to. Make sure that they're still significant as time goes on. And I'll look at one more chart here, try to get some significant levels charted. This is a good one right here. So this was a pattern that was forming on Amazon at the time, head and shoulders. That's why I have this blue line here. It's just an intraday level. But again, charting them, you want to look for areas where the price action, its continuation, is struggling. So we're continued up, pushed down. And looking at this chart at the time, I'm looking for a continuation down. It didn't continue down. It bounced, so I can put a line here. Alter it a little bit to make sure it's lined up. So I put it at the bottom of the body. We had a wick that came down to the level. We had another wick, another 2 wicks here, and then it continued up. So it bounced off the level after it closed above it at 9.35. So again, you want to be looking for areas where the price action's continuation is struggling, meaning if it's going up, and it struggles to continue to go up, you can mark a line and then extend it out, look for more rejections, more breaks, more bounces, whatever you want to look for to validate why it's a significant level, or if it just happened to reject there. Because you can go all the way down to a 1 minute time frame and get significant levels on that, but they're obviously not going to be as significant on a 5 minute or a 3 minute or a 15 minute, 1 hour, 4 hour, so on. So that's another thing to keep in mind too. The lower the time frame is, the lower significance that level has. 5 minute, I use that because I think 5 minutes is this kind of sweet spot for day trading. You're not trading on a 1 minute where you're only in the trade for 20-30 seconds. You're not on a 3 minute where it's not quite that low, but it's still a relatively fast time frame. And then the higher up you get, 15 minute, 30 minute, 1 hour, then you're in a trade for an hour, 2 hours, waiting for a candle to close over or under. So 5 minute, this candle gives you about, I believe it's 50 to 60 candles a day. I don't know off the top of my head. But here we can also chart an intraday level on Amazon. So as I previously said, you don't need to use all bodies or all wicks. So at 95.16, I'm using 2 bodies and 4 wicks. 4 wicks. So the candle at 10:30 and the candle at 10:45, those bodies close below this level, but the wick of these 5 candles rejected off the level. Then we closed above it. This would indicate that I can take calls. Yes, it might be a little it's within that 20 to 30 cent range that I have for chasing, so you can take calls here. Next price target, you can, again, whatever you want, 5, 10%, or just set it at a price target you see coming on the chart. And then invalidation is if a candle closes below the level, or whatever you want to set for a stop loss if you're in the green. So if I had taken a trade here and set my invalidation as a close below the level in which I took the calls over, I theoretically wouldn't have been stopped out of this trade because we never closed below the level that I took the calls over. But because it was Friday, and then it would have worked if I took next week expiration, but if I took 0-day expiration, theta decay is going to put you probably back to either break even or negative 10% here. And then you can either leave that as your stop loss, or you can say, hey, look, I'm never invalidated on this trade because we haven't closed below the level that I took the calls over. I'm going to continue to hold this, and then you would have been well in the green over here. And if you guys are looking along, you can go ahead and chart this as well. This is just how I chart them. I don't solely use the bodies, and I don't solely use the wicks. I use them together. And as long as there's a candle that closes below, I'd say that validates the level. So you're looking, again, anytime the price struggles to continue. We were in an uptrend here, rejected. The price was struggling to continue up, and then it finally broke and continued higher, and then it somewhat bounced off the level, or nearly bounced off the level over here. If you want to, you can also use wicks entirely. So if you were doing that here, that's how I would draw it, because that's where we have these 3 touches, and then if you continue it out, it happens to line up with this candle over here. But don't be worried about drawing too many lines in your chart. You want to make sure that they're valid overall. So if I was in this trade, I would have put it at 95.15, and then you can back test it after and alter where you put the level and put it at 95.20, seeing that this candle bounced off that level, and that's using just the wicks over here on the 5 minute. So what I will do is, for homework for the next course, I want you guys to what chart? Let's see if I have anything off the top of my head. Go ahead and do it with Soxel. So for next and wall dive, I'll chart these right now. A few examples on here. So I would say I'll get this on a horizontal ray because it's over several days. Can you guys see why I put this 1228 level here over the course of 2 days? So the first break was right on Thursday. So we closed below, pushed down, rejected, and then price action continued. So once it got over that level, it no longer struggled to continue, and it continued down. Rejected once we hit that level again, that 1228 level, pushed down once more. And then Friday, we broke the 1228 level. Price was pushing up, struggled to continue at 1228, found a bottom, and then continued up. It closed over on the 135 candle here and then continued. So this 1228 level I will leave as a white line for now, and then if we do, say we come back down next Monday and the price does something like this, bounces off that level, bounces off again, and either continues up, or if it breaks, then that would validate that level for being longer than just intraday or intra-week. And if we wanted to, we can go out on a longer time frame. So 1228 was that level. And we can see that it's still valid even back here on Friday, January 13th. So we bounced off the level in pre-market, and we bounced off it once the market opened. So 1228 on Soxel is a longer term significant level. And that's essentially how you find them right there. So you want to start on a smaller time frame, 5 minute. I would say I wouldn't go anywhere below the 5 minute. And then once you get a level like that, you want to go out to 1228. My bad. You want to start zooming out. Stay on the 5 minute because that's where you found the level. You want to start zooming out. And then you can see, hey, this level is significant all the way back to January 9th. It also broke on January 11th and January 13th. So going forward, I would leave 1228 on your chart, and then you can play that level until it gets invalidated. And I would say because this is a longer term level, you want to go back and look at it once, maybe twice a week, and see if it's still valid. And once you get a level like this on a smaller time frame, you can also start moving up if you wanted to look further back. But it's gonna get a little messy because these candles aren't on the same time frame as the 5 minute you found it on. But if you see something like this on the hourly, so you can chart significant levels on larger time frames as well. But here, for instance, you can see 1118, 1121. Price action tried to continue up, rejected. Multiple doji candles where it was just flat, rejected. The next time it tested that level was right here, January 9th. So a whole, 19 days, 20 days it took to get back over that level. And then once we got back over it, we bounced, turned into support from resistance, and then we continued up. So that will conclude the the first course right there. For homework for next time, I'll look to chart 7 significant levels on Soxal. I already gave you guys 2 right here, 1228 and 1121. Go ahead and look on either the 5-minute, 15, or hourly chart. You can also go all the way up to 4-hour if you want to go way back, but preferably the 5-minute, and find some more significant levels on there. And if you want to go as far as to say how you would have played them, go ahead. If not, you can just look for those levels, and I will post my chart next week with the levels on it so you guys can compare and see if you were correct or not. And if not, then you can definitely ask questions at the beginning of next class, and I'll answer them to see where you might have gone wrong or where you were correct. But that's the homework right there. It's chart 7 levels for Soxal on the 5-minute to hourly chart. And I already gave you guys 2 right here, 1228 and 1121.